Hey guys, it's James back with another video. Today I wanted to look at SCHD versus VYM. I got a comment over on my channel a few days ago asking if I could do a video about how much of SCHD and VYM that you need to hold, how much in your portfolio to be able to achieve $1,000 or $1,000 a month in dividends. So what I'd like to do, my objective for this video is to review SCHD and VYM's web pages, check out what each fund's or ETF's objective is over on their web page, take a look at how these two funds overlap each other, take a look at their holdings over on Seeking Alpha, and then come back over to my compound interest analysis spreadsheet. And I know this can be a little overwhelming if it is the first time you have seen it, but in a short explanation, here in the yellow we have all of our inputs, and then in every single one of the green little sections we have our outputs, and I'll go through each and every one of those. But in simple terms, we have one portfolio or one security, and we have another security with dividend yields inputted into the calculator, the expense ratios, and then we play around with the growth and contribution numbers to be able to determine our portfolio value over the short term and what type of income we could be receiving from these two different portfolios or two different securities. And we can check out the long term as well, looking at a 10 to 40 year snapshot. But before we get over to the calculator and determine how much it takes of SCHD and VYM to be able to achieve that $1,000 a month, let's head over to SCHD's website. The objective for SCHD is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now here in a little bit, I'll show you what it looks like over on Seeking Alpha's website, the top 10 holdings that they have. Over on VYM's website, their product summary or objective is to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. It provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yields, and we'll go over the dividend yields of the top holdings in VYM, and it follows a passively managed full replication approach of this index. So you can see from the two fund objectives here for SCHD and for VYM over here, the objective is to target high dividend yielding stocks. So that begs the question, how much do these funds overlap? Well, over on etfrc.com, they have an overlap calculator. We put in SCHD and we put in VYM and we find out how much they overlap, and they actually don't overlap as much as we would think. There's a total of 89 overlapping holdings, meaning of SCHD's 101 holdings, 89 of them, or 89%, are also in VYM, and of VYM's 447 holdings, 20% of them are in SCHD. So it appears that a lot of SCHD's holdings are in VYM, but VYM has about 350 more high-paying dividend holdings, so it's a little bit more diverse than SCHD. And also, when we get back to my calculator, we'll get to see the performance of SCHD versus VYM and which strategy would outperform the other. But let's check out how SCHD versus VYM performed in the past here, over the past 5 to 10 years. And we're going to check out the historical comparison of SCHD versus VYM over on Portfolio Visualizer. We're just going to start with a $10,000 initial investment and go on a month-to-month comparison. At first, we're going to take a look at not reinvesting dividends and see what type of CAGR numbers we get. We have a portfolio of a 100% SCHD versus VYM. We come down here, and a $10,000 investment would have had SCHD outperforming VYM over the course of this time period. And if you come up here, you can see that the CAGR number without dividends reinvested is 10.5% for SCHD and 8.63% for VYM. VYM. So it does look like SCHD would have outperformed VYM if you did not reinvest the dividend. Let's go ahead and see what it would look like if you were reinvesting dividends. Analyze the portfolio, and it looks like SCHD would have a 13.83% total overall return, and VYM would have a 12.08% over the course of this time period. Let's jump over to Seeking Alpha to be able to pull some just some various values, and I just want to show you how powerful of a website Seeking Alpha is. It has so much packed into it, and it's very easy to use. So here's SCHD's website. Here is their price return for 1 year, negative 2.07%, 5 years, a total of 66%, and 10 years, a total of 164% over the past 10 years in its cumulative return. Over here, we're going to be using the expense ratio as well as the 12-month trailing yield, dividend yield, 3.14. But let's come over to their holdings and see what SCHD's top 10 holdings are. It would be Texas Instruments, Pepsi, Coca-Cola, Home Depot, Cisco, Amgen, Merck & Co., Broadcom, Pfizer, and IBM. And their top 10 holdings account for about 41% of the total ETF. And I'm going to flash the dividend yields up here for the top 10 holdings. I just want to do that to give you an idea of what type of dividend yields you're looking at for the top 10 holdings. If you recall, SCHD does track the US Dividend 100 Equity ETF. So that's just a good idea of what type of dividend yields you are getting with these stocks. There's a few other things here on Seeking Alpha that I really like. I like their momentum tab. It tells you their total return from 1 month, 6 month, all the way to 1, 3, and 5 years, and then just their price performance return over the same time periods, which is kind of nice to look at. And then you also have just a snapshot of what their dividends look like. They also have a bunch of sub tabs that you can take a look at on your own time. They just have a dividend summary here, dividend yield of what they're expecting it to be. FWD means forward yield, so it's 3.65%. If you recall, their 12-month trailing yield was about 3.14%, and in an expected annual payout is around $2.40, with a 5-year dividend growth rate of 13.32 and a 9-year consistent dividend growth. Coming over to Vanguard's VYM page. For Seeking Alpha, same exact expense ratio as SCHD. Their 12-month trailing yield is 2.92%, and we'll use that in our calculation to be able to determine how much VYM we would need to be able to achieve $1,000 a month in dividends. Also, for VYM on their Seeking Alpha page, if we come over to their holdings, their top 10 holdings are such as these 10 holdings right here, but their top 10 holdings only account for 23% of the total ETF. If you do recall, VYM has around 450 total holdings. And again, I'll flash up the dividend yield for the top 10 holdings just to give you an idea, as this ETF is targeting higher dividend yielding stocks. And if you'd like to, on your own time, go over to the Momentum tab and the Dividends tab to be able to see what their price performance and total performance and their dividend history is for this ETF. Now back over to the calculator, we took a look at the web pages for SCHD versus VYM, found out what their objectives were, took a look at their overlap on ETFRC.com, and then also over on Portfolio Visualizer, we found out that SCHD outperformed VYM. We took a look at the ETF's holdings over on Seeking Alpha, and now we're going to go over to my compound interest analysis spreadsheet and determine how much we would need of these two funds to achieve $1,000 a month in dividends. Over here in our yellow section, we have SCHD and VYM. Put those in the calculator. We're using the 12-month trailing yields we found from Seeking Alpha. Here are the expense ratios already calculated into the calculator. And just for fun, we're going to see how much, if we put $500 a month in SCHD versus VYM at the current annual growth rates, or these CAGR numbers. And I do have a calculation calculating the 1, 2, 3, 5, and 10-year CAGR numbers. What this is telling you, and this is price performance only, not total performance, including the dividend. This does not include the dividend. So this is price performance only. So for the past year, this is saying that SCHD has had a negative 2% price performance, and VYM has had a positive 0.36%. And if you come down here for the 10-year price performance number, this means 10.22%, meaning over the past 10 years, if you would have invested in SCHD, you would have gotten 10% per year, every year over the past 10 years. And you would have gotten 8.07% every year for the past 10 years for VYM. We're going to say, let's go ahead and reinvest our dividends. And what that does is that changes the output over here in the green section under our income. And it tells us how much dividends we would be receiving for our portfolio sizes. We're going to start with an initial deposit or initial balance of $1,000. And let's say we are 25 years old. So with all of these growth and contribution numbers put it into our yellow section here, let's take a look at what our portfolio value would look like if we owned SCHD versus VYM. Well, with the principal starting of $1,000 at the age of 25, here's what you would get with a $500 a month contribution and a 10.22% growth rate for SCHD and 8.07% growth rate for VYM. This is what you would receive all the way up until you were 35 at 10 years old. And this is what you would receive all the way up until 35 after 10 years of consistently investing $500 a month. And this is the type of income you would receive. And this would be annual income. So after your 10th year of investing, if you started at 25, you would have $3,200 in a year with SCHD and $2,600 in VYM. And here is just a long-term snapshot for SCHD. If you invested for 20, 30, and 40 years consistently, $500 a month with a consistent 10% growth per year, not including taxes on the dividend, this is in a tax sheltered account, you would have an account that would be worth these values right here if you started at 25. And then for VYM, these are the type of account values you could expect to receive after about 40 years of investing. Now we come to the section of the calculator where it automatically calculates for us the amount of the security that we would need to be able to achieve annual dividends and what we'd need to achieve these monthly dividends. So to be able to read this, to be able to achieve $100 a month in dividends, we would need 38,217 of SCHD and 41,096 of VYM. And here is to answer the question at the beginning of the video. To be able to achieve $1,000 a month in dividends, we would need 382,000 in SCHD and 410,000 in VYM. And if we would need $5,000 a month, we would need 1.9 million in SCHD and 2 million in VYM. And over here, under the very same, and over here, very similar, this is how much we would need in SCHD if we wanted $1,000 a year or annually in dividends, 10,000 a year and 50,000 a year. This is how much we would need in these two different funds. If you do recall, these were the dividend yields for the trailing 12 months. Let's say the dividend yield was a little bit higher. If you recall, the forward dividend yield for SCHD was a little higher. Let's say it was 3.3%. And let's say for VYM, it was 3.1%. If we change the dividend yield numbers here, we come back down and you can see that the amount of SCHD and VYM that we would need to achieve these monthly dividends, these numbers would actually go down. The higher your dividend yield goes up. So just keep that in mind. So if you guys want to play around with this calculator, I do offer this calculator over on my Patreon. If you guys are interested, head over there and download this version of the calculator. Head down into the comments and let me know if you'd like to see another ETF or security analyzed in this way. And with that, thanks for watching.